Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today on day 3 parabolics. On the weekend, we did a short video similar to this, talking about Monday being day 1 and Wednesday being day 3 in a Monday to Friday weekly template. And I received quite a few emails after that saying still confusion about the day count. I will reiterate, there are a Monday to Friday 3-day setup, day 1, day 2, day 3, Monday, Tuesday, Wednesday. There are day 3 breakout trades, whether that's in the long direction or short direction. And then there are 3-day setups, which is why we can have different day counts, because we could have a Thursday that is our day 1 on our new count, day 2 Friday, and Monday can become a day 3, and day 3 is also day 1 in a weekly template. So there are 3 different scenarios, but we're talking today again about the day 3 parabolic trades, day 3 being Wednesday. This video was called Master This Day Trading Setup, the Parabolic Price Action Setup, specifically targeting Wednesday day 3, because we can often have parabolic moves. And I've stated this, that you could trade 1 or 2 of these a week and do significantly well. Parabolic trades, page 84 onwards, and these are the opportunities where markets are about to explode and go vertical. And this is where traders can grow a trading account very quickly. Now, when you get a day 3 parabolic, that can be a reversal or a trend trade, and they can be significant movements. We're looking at the Japanese yen 1-hour chart. We have our Monday. I'll just type in Monday for traders to see. We have our pink line is our weekly separator. And on Monday, we have our day 1. That's our opening range again. And I just keep, talking about 1 push, 2 push, 3 push. That's the sort of scenario we want to see. We have day 1 opening range. Day 2 triggers breakouts and reverses. And that's our initial balance now. So that is our high low for the week. And in a high percentage of situations, these 2 extremes, one of them will tend to hold. And so when we have a day 1, day 2, day 3, it's possible we may have an opportunity for either a session parabolic, a 3-session parabolic, or a day 3 parabolic. So on Tuesday, we had a market that reversed in Asia and came down 3 levels into our US session before reversing inside, giving us a break in structure. And again, we talked about this yesterday in the video: peak formation high, peak formation low. And that's what helps develop the thesis for a parabolic day 0 setup, whether it's for a session trade or for a 3-day setup, where we can get a peak formation high of the week, peak formation low of the day, for a consolidation inside and a vertical blow-off move on a day 3. But in this particular situation, we have a day 3 that could potentially giving us a parabolic setup heading into our new day. And again, the same situation that we highlighted in yesterday's video. As we head into our new session, our universal entry criteria is met in the 2nd hour. Breakout pullback, that's the dump and pump. So we have the initial front side and then the market coming back and then revisiting inside of our EMA. And it proceeds to trade up 3 levels plus of rise. So in excess of 75 pips into the London session. So 3 levels of drop, peak formation high, peak formation low in our US session, consolidation, and then the reversal on day 3 to continue the trend. And one trader said, why would you go long when it's a false break? It's not a false break. Remember, we have an opening range breakout. We have our high and low of the week. This is a market now trading back to the high of the week. Low of the day, high of the week. Peak formation high, peak formation low, consolidation. Day 3 for the blow-off move to the high of the week potentially, which gives traders an opportunity, if it develops, for a possible reversal trade in our US session. Same process applies. Peak formation, low of the day in London. Peak formation, high of the day in our London window, in the gap time. Consolidation, the breakdown, no major red news on the calendar, and the continuation for 25 plus. Easy pips, no stress, no heat. Some traders held on to this, but again, we'll blow this up. If it's going to continue, it'll fall right through. 1 push, 2 push, 3 pushes, and now we are in our New York Open and into the third hour. If this market has not broken down, I would be out of this trade. But on a market like this, we've taken out the low of the day of the London session. It's gone parabolic, but we've now gone into consolidation at the low. I'd be locking in the money. 1 push, 2 push, 3 push. Day 1, day 2, day 3. We had a parabolic continuation trade and a parabolic low-hanging fruit opportunity in our US window. A 3-day setup, right? This is our low, or we can say that Asia was our high. That's our first session, second session, consolidation, continuation. London puts in the new high of the day, 1 session, 2 session, 3 session, reversal. For an easy 75 plus in the long direction, and for US session traders, 25 plus low-hanging fruit in the US window. We have 3 distinct levels of rise plus in the Japanese yen that takes out the high of the week. You'll notice on the Swiss franc, we had an inside day yesterday, day 1, day 2, inside day, day 3 takes out the high of the week, but we're inside of a 50 pip box. They both gave a US session trade. Both blew off 25 plus. The Swiss franc gave a very nice clean trade back into the low of the day, but a different presentation in terms of how that market traded throughout the day. It traded within a 50 pip box. We didn't trigger any levels until later in the day, London session. Then the market gave 3 pushes to the high of the day before going vertical. So let's go back to that process. Peak formation low, peak formation high. We have a market on the third push that gives us our peak formation heading right into our US window. If you aren't sure, understand where volume gets trapped. The volume is trapped up high. This market is not coming back. Low-hanging fruit trade back into longs from the London session. Which brings us to gold. And we have our day 1. We had our failed breakout on day 1. We talked about this yesterday. The vertical move down to the low of the day and the blow off back through the high of the day. The consolidation and breakdown into our Europe London session. So again, we have peak formation high, peak formation low in our US session. Go back and watch yesterday's videos. I don't know how many times we see the same type of setup. Different volatility, same type of setup. Consolidation. We can readjust just like every other level. We readjust our levels when they're broken and that market breaks down. This is level 1. Obviously, we were coming out of level 1 on day 3. Now, I've drawn the 3 boxes because Europe went 3 levels of drop. Now, when I come to the screen in the US window, I had a thesis that we might see a stop hunt and then a reversal into the low of the day or in through the low of the day in New York, and possibly a third bounce and maybe a reversal later in the day. But we had a market that as we came down into that hour heading into the session, it went into consolidation. And the same process applies. We have a peak formation high and a peak formation low and a consolidation heading into our US session window. This market popped up. This is a 1-minute chart and the same process still applies. Peak formation high, peak formation low. We went into consolidation. In the first hour, locked in the low of the day, which is where I entered into the market and did not expect to see a vertical move go so fast. I was expecting maybe 30 to 45 minutes to work up between 50 and 75 for a revisit of the low of the day or a stop hunt down into the low of the day, and possibly a third hour reversal or a trade that would reverse later in the session. This market aggressively went vertical and went into consolidation above 75 at the end of the first hour. This is a coil for a vertical continuation move. Now, when the second hour started, I still thought we could see a high of day put in place and possibly a breakdown, but it went in vertical in through the next double zero box. At this point, when the market went into consolidation above the zeros, I added positions into this trade. The market broke out prior to the New York Open and pulled back. At the open of the session, I added again, and the market went vertical very rapidly in through back to breakout traders from the low of the day, at which point I started to take positions off and then exited the position into the third hour, and again did not expect this explosive parabolic reversal to be so aggressive and fast. But upon coming back and reviewing just again the process, we have our opening range. Some traders asked yesterday was first green day, but recognize the type of day Monday was. Peak formation high and a collapse. That is a first red day type of scenario. The peak formation high was made first. We have a market that has potentially at this stage locked in the high of the week, a creeping trend up into the high that went into consolidation and engulfed in the Asian session. This is a perfect setup for a parabolic move, day 1, day 2, day 3. When we went outside of the opening range, notice, this is a 1 hour chart, and we'll blow this up. Notice we have our 3 hour window, and then 1, 2, 3 in our gap time. 3 more hours, 1, 2, 3, no major red news on the calendar. These lower highs and smaller bodies should have been a dead giveaway to me. Again, I was not paying attention until that market exploded, and then I realized that the parabolic reversal had already started. The breakout traders from the low of the day were already in the market. The breakout traders from the low of the opening range of the week were already in the market as well. That alone was a 100 pip box back up to breakout traders from the London session. So important to recognize the opportunities in both directions. Traders were able to clean up in the London window. Traders were able to clean up in the US session. We had fantastic opportunities for session parabolics on the yen. There were session parabolics on the pound yen, euro yen after major red news. There were reversal opportunities on the pound and the euro in the London and US sessions. Just briefly, I highlighted this again. We had 3 levels of rise yesterday, 3 levels of drop today in the S&P 500 for a reversal trade that several traders hit very cleanly after the New York session opened, but also some traders entered into the end of the first hour. There was no major red news on the calendar. They had an entry pattern complete and virtually a zero stress trade coming back up. The NASDAQ again, very similar 50, 50, and 50. Working into the low of the day, we have a break in structure, our little W pattern, a vertical move in our US window, and a third hour continuation trade back through the high of the day. Again, this is a 5-minute chart. We can put our EMA on. After the open of the session, the consolidation, 3 pushes, and an engulfment for a continuation trade back to the high of the day. Study these parabolic opportunities, traders. As I will repeatedly say, if you only took 1 or 2 parabolic trades a week, those 2 trades alone can significantly grow your trading account. So study these, master these, understand how they will set up. Again, 3 sessions, 3 days. Today, Wednesday heading into Thursday, we can get another 3-day opportunity. On Friday, we can get a session parabolic. Today, tomorrow, they will repeatedly show up, potentially in the session that you're trading. You can scan through relatively quickly to identify 3 levels of rise or fall. It takes a bit of work sometimes to scroll through, but if you train your eye to identify these patterns, you will see the opportunity in understanding 1, 2, 3. Day 1, day 2, day 3. 3 pushes, 3 sessions, 3 levels. They can offer you significantly opportunities to grow your trading account. 1% better every single day, traders. Keep it simple. Keep it going and keep it growing, and may the markets go with you.